Hey, what's up? Welcome back. Today we're going to talk about DSCR loans and what's hot in 2023. But before we get into that, though, if you have any questions related to financing, DSCR loans or otherwise, go ahead and give me a call at the number on the screen. Or you can just submit a scenario directly at quotethisdeal.com and we will kick you back terms that we believe are pretty competitive. So, DSCR loans. There's a lot of DSCR stuff going on right now because people are buying real estate up in this market, particularly investors, and sometimes and oftentimes I'm seeing getting stuff at a discount. So I wanted to go over the DSCR programs here to kind of tell you what we can do. So as far as the term of the loan, we can do your typical 30-year fix. We can also do ARM programs. So everyone knows what a 30-year fixed is. Rate will be driven based on the leverage and the risk of the loan. So borrower credit, where the property is, things like that. As far as the ARM programs, I'm seeing a lot of, we're closing a lot of these programs because of interest rates right now being higher than, or I guess I should say they've gone up quicker than rents have gone up. So it's a little more difficult to cash flow on a 30-year fix. It can still be done if you're getting the property at a deep discount and the rent is higher. It's one way to cash flow really well on a 30-year. But for these ARM programs, the way they work is there's either a 5, 7, or 10-year fixed interest only portion of the loan, and then it's amortized over the remaining 25, 23, or 20 years. So it is still a 30-year loan, but it is adjustable after the fixed interest only period. So what that means for you is that for the first, say 5 years, you're just paying interest only. And with the 5-year, the 7-year, and 10-year, there's a shorter prepay period. So for the 5-year, for instance, it's a 3-year prepay. So the idea is that, whenever the market starts to turn, there's predictions out there, but whatever. You refinance out of the ARM and do a 30-year once kind of rates have taken their course. And if not, you're still cash flowing and you can refinance whenever. But the idea here is not to stay in this loan for the full term. It's to get out once the prepayment period has expired. But as far as these programs goes, the big things are good cash flow because you're only paying interest. We can do no appraisal. We can do a BPO. I don't recommend that just because, I'd rather get the full value out of the property. Excuse me. And then one of the key things here is the 90% of the purchase price. So the way this works, and there's two things that kind of have to be true here. One, it still has to be 80 LTV. So meaning the property appraises for higher than you're getting it. So if you're getting a discount, you could potentially qualify for this. And it still has to DSCR. Whoops. So it still has to pay for itself. Those are the ways we can go higher leverage on that. I've closed a bunch of these because people are getting these rentals at a discount, and the rents still work out because it's an additional 10%. And I'm generally seeing it go better, work on lower value loans in the 100 to 200 range. But if the math works, we'll do it. So that's those are the purchase programs. Again, not seeing a lot of lenders do this 90% of the purchase price. So keep us in mind for that if you want to bring 10% down on a long-term rental. The next thing I wanted to discuss with you is the refinance. So we've got the same term programs. The only differences really are with leverage, right? So as far as leverage goes, I can go up to 80% cash out on a 30-year and those ARM programs. But the stip there is that DSCR has to be greater than 1. I can show you how to calculate DSCR in a different video. I've got a sample worksheet here, but I won't go into too much detail with that. If DSCR is not greater than 1, we're limited to 75%. And the other instance where we're limited to 75% is short-term rental income. So recently completed a refi where all they had was Airbnb income for 7 months. And that was enough to cash them out using that income only, no lease, just taking the numbers and making sure that the mortgage pays for itself. And we were able to put them into a 30-year fixed. And with the income only being 7 months, they're certainly going to cash flow very well this coming year. With 75% cash out, we also have no DSCR, meaning you can go less than 1. If that's the case, however, you will need to show that you've got reserves in the bank, because with a DSCR less than 1, that means that the property doesn't cash flow itself, at the time of the closing. That doesn't mean it won't in the future, but as far as like the day we close, you'll need to be able to show some adequate reserves so that you can successfully pay the mortgage. Okay, those are the 2 types of DSCR programs I want to talk about. Again, if you want to chat, you can call my cell, 347-696-0192, or just directly submit a scenario at quotethisdeal.com. Talk to you soon. See ya.